My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you, tell you why days like today happen. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. All right, what do we think was going to happen? Did you expect to come in this morning and see a stimulus deal in Washington coupled with falling COVID cases? After today, where the Dow plunged 650 points, S&P plummeted 1.86%, Nasdaq nosed 1.64%, and boy, it was ugly at one point. When you listen to the reasons people are giving for this decline, I mean, frankly, they're dumber than a bag of hammers. Let's be realistic. Every day we hear about the stimulus talks. Speaker to Treasury Secretary to Speaker. Even as we passed the deadline for a deal made by the Speaker a week ago. I wish they'd stop talking because at this point, all they're doing is creating false hope, and America doesn't want false hope. Both the Democrats and Republicans see no deal as a win for them politically, even if the rest of the country loses. Look, I'm confident we're going to get a stimulus package eventually. But you got to stop betting that Congress is going to come to your rescue any minute now. There is no stimulus cavalry coming anytime soon. Certainly not before the election. Don't be Custer, little bighorn. Get a game plan, for heaven's sake. How about COVID-19? Look, we've been predicting this spike for months here. Why the heck do you think we started the mask competition at xprize.org/mask? We knew summer was a temporary reprieve. We knew it would get worse once the weather got colder and people went back indoors where most of the COVID is. And America desperately needs a nationwide mask mandate. It's the most effective, least disruptive way to fight this virus. I hope the masks I have sponsored help make it happen. I totally understand. It seems like a terribly inefficient way to stop this thing. We don't have much, right? We don't have any contact tracing and social masks. But come on. It's not like we suddenly found out the pandemic's out of control. Those case numbers have been creeping higher for more than a month now. We know how this plays out because we just saw the same thing happen a few months ago. The only thing more incurable than COVID is the market's COVID-related optimism. For weeks now, I've been recommending the bull markets that have been created by an out-of-control pandemic without any stimulus. Day after day, though, I said you should wait for a pullback before you buy the COVID stocks till people realize that COVID's out of control. We have no stimulus. Well, now it's happening. So rather than panicking, which never made anybody a dime, we're sticking to our guns and coming out here tonight and telling you to put the buying plan into action that we've been waiting for. Remember the COVID bull markets? There are a bunch of them. First, there's the bull market in 5G. Anyone who spent the weekend trying to adjust their fantasy lineup or watch Borat was sorely tested by slow internet speeds. That ends with 5G. Two, there's the bull market in digitization, broad term, but think anything that helps companies accelerate their move from on-premise, which in many cases is locked down, to the cloud. Three, we've got a bull market in hygiene. We don't have many ways to fight this virus, but cleanliness, pathetically, is one of them, but I'll take it. Four, we got a bull market in home renovation, both do-it-yourself and professional. These are the stocks, the companies that make the stay-at-home, work-at-home economy more bearable. It's the extension of a housing boom that's caused by a major exodus from the cities to the suburbs and even further out. Remember, though, the renovation trade is all about tools and paint, not home builders. Five, there's a bull market in all sorts of things involving cars. Thanks to the pandemic, mass transit and even ride-sharing are viewed as unsafe. Easier to just get a car, especially if you've moved to the suburbs. Now, there are three big fears weighing on us: getting sick, shutting the economy down, and the possibility of an election that doesn't get decided overnight. After 2016, you know what? I don't even want to hazard a guess about who's going to win the White House or the Senate this time around. I can say that if the outcome's indecisive and it takes a week to find out who won, well, the market's going to go down, be another opportunity to go through these bull markets. But the other two fears, listen, every single bull market I just listed will work, even if COVID keeps spiking and we have to go back into lockdown. And I don't want a lockdown. We had a Dr. Faust on today who was really brilliant. He was talking about we got the lockdown wrong. I mean, it's the bars that cause problems, not the schools, okay? Now, there are always objections that seem to invalidate the thesis. For instance, we know the home builders have run too much, and we've seen a bit of a slowdown in mortgage loans, so people are backing away from that group. We know the old-school automakers face a unique set of challenges from Tesla to imports, as people are backing away from that on the first time of sell. And the hygiene stocks, well, they've run miraculously. I still like them, but they have run. Still, you can't just sit back and let the market come in without taking some cash off the sidelines and putting it to work when we've been negative. Discipline says it's time to gradually start buying the COVID winners. So given that almost every major tech company reports this week, let's tackle the decline in tech today because it was really vociferous. We will get to the others if the market keeps falling. As is often the case with this kind of sell-off, you can point to a proximate explanation that's clear, simple, and in this case, wrong. We got that this morning when SAP, the gigantic German software company, reported a massively disappointing quarter with even terrible guidance. I mean, horrendous. I mean, like going back to a couple of years. What's wrong? To listen to SAP, the digitization process has slowed, deals aren't getting done, and there's finally a cost to tech from this endless COVID nightmare. You know what? If you like football like I do, that's called a misdirection play. It's what happens when the quarterback fakes a run and then passes. You bid on the run if you sold the cloud stocks off this SAP news. These are some of the best pandemic plays out there, and they got slammed today. Remember, COVID has accelerated digitization, not turned it back like SAP was talking about. Now, there's a second problem. Apple reports Thursday, and a bunch of analysts previewed the quarter. They talked about how CEO Tim Cook has good visibility on the new iPhone, and he could be very upbeat about its prospects, not to mention 5G. But that's not how I see it. To me, there's simply no reason whatsoever for Tim Cook to give any predictions, maybe to please Wall Street. Please. He's all about making the best possible product for Main Street, and the customers will follow. He doesn't do hype. If you expect hype going into the quarter, you're going to be disappointed, which is why I wish the analysts wouldn't do that. Own Apple, don't trade it. Someone today on Twitter posted some horrible picture and said Cramer is just ducking everything on Apple. And it's like, my wife is sick of hearing me talk about Apple, okay? So, like, that's the stage that we've gotten to. So shut up. Anyway, I think you can start by picking up some of the most extraordinary stocks that have been dragged down by S&P's bad quarter, when in reality, they're the reason for S&P's weakness. It's not that the cloud has slowed. It's that other companies are eating SAP's lunch, and also, and this is really nuanced, but SAP's transitioning a client to the cloud. That customer doesn't spend as much on the cloud on SAP as it did before it was on the cloud. Now, I like Salesforce. I was also surprised to see Oracle down 4% with this TikTok positive still alive and well. I don't mention Oracle very positively that often. Oh, and if you can stomach it, why not stick with what works? Amazon reports on Thursday. Now, this stock at one point was down, okay? And it looked like it was going to be one of those cases where it was going to roll over. And then it just stopped, pirouetted, and started going up and actually finished higher. Do you know what kind of strength it takes to overcome today's gravitational pull? You know what that says? To me, it says that Amazon, it could be the right place to be. Now, before you say, wait a second, Cramer, what kind of moron would buy anything after a day like today? I want you to consider this. The New York Times just reported that a privately held player who's very smart wants to acquire Dunkin' Brands. Some people thought the stock was already overextended coming into this morning. But I think the alleged buyer here, Inspire Brands, is very smart. I've watched as they bought Sonic and then snapped up Buffalo Wild Wings at very good prices. They got a phenomenal track record. What are they getting with Dunkin' Brands? How about a retailer that can take advantage of all the empty retail spaces created by the pandemic? How about a company that's put a huge amount of technology into the stores? How about a company that's surviving while so many of its smaller competitors will go under unless we get a stimulus package immediately? See, what did I tell you? People buying stocks based on, including big companies, on no stimulus. Lots of unfinished sellers and uninformed sellers in Dunkin', one really smart buyer. Bottom line, get comfortable because this is going to be a rocky week. But with COVID raging and no stimulus in sight, we got the 5 bull markets here. 5G, digitization, hygiene, home renovation, and cars. We're going to be hounding and pounding these themes. We're not going to just like say, what are those themes? That's not the way we work on Mad Money, and we've been at this thing for a long time. You need to be disciplined. You need to start buying them in a weakness, and that is unrelated or actually makes no sense whatsoever because it's good for these 5 bull markets.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.